Imagine buying a home, and when your kids are thinking about retirement, you're still making payments on that home. Well, this is the position that you could be in if you consider getting a 50-year mortgage. Now, right now, the 50-year mortgage is not in place, but there has been some talks about it at the federal level. And the reason why the federal government is thinking about approving a 50-year mortgage is because they realize that home prices in a lot of places have skyrocketed, and it makes it very unaffordable for people with fewer means and less income to be able to afford a home. So they're trying to come up with ways to make homes more affordable so that people can buy homes. But before you think about taking on a 50-year mortgage, I mean, really paying on a mortgage for a half a century, let's talk about the pros and cons of doing that. The number one benefit to getting a 50-year mortgage is that if you're in a position where it's been tough for you to qualify for a 15 or a 30-year mortgage, a 50-year mortgage actually makes that home a little bit more affordable, meaning the monthly payments on the home would be more affordable because you're spreading out that debt over an additional 2 decades. Okay? Number two, the home appears to be more affordable if you're in a position where maybe you want to move into a nicer neighborhood, maybe you're not a first-time home buyer, maybe you want to move up, and maybe the homes in the neighborhood are a little too expensive. You can't afford the payments on a 15-year mortgage or a 30-year mortgage, but again, spreading that payment out over an additional 20 years makes the home appear more affordable. So that's the other time that it could be a benefit. Number three, it makes sense to buy a home with a 50-year mortgage if you know that you're not going to be living in that home for 50 years. You know that you can pay it off before the 50-year deadline, meaning that maybe right now you can't afford a mortgage, a 15-year or 30-year mortgage, but a 50-year mortgage is more affordable in this particular moment because maybe you know that in a few years your income is going to increase, thereby allowing you to be able to make additional payments. And if you make additional payments several times a year or make large lump sum principal payments a few times a year, then you pay your house off much sooner. So it would make sense then to do that. But also make sure that the mortgage, if you do go into a 50-year mortgage, if it is approved in the future, make sure that there is no prepayment penalty. And usually with mortgage companies today, there isn't a prepayment penalty. Meaning a prepayment penalty is where you get penalized and you have to pay an additional sum of money because you weren't in the loan long enough for the bank to make a sufficient amount of funds for doing the loan. Okay? So that's what that is. So moving on, those are some reasons why you would want to get a 50-year mortgage. Again, I would say short term. If you know that if this is your first home, or even if it's your second home, and you know for sure that you're not going to be in this loan for 50 years, it's probably a good idea. Okay, so now let's talk about the cons of a 50-year mortgage. Con number one, with a 50-year mortgage, yes, the life of your payments are being extended another 2 decades beyond the 30-year mortgage, which is most popular. So even though your payments are going down monthly, over time, you're actually, in some cases, with regards to interest, you're going to pay tens of thousands more and sometimes hundreds of thousands more in interest because you've got that extended period of time that you're paying on the loan. And number two, that brings us to number two. When you have a mortgage, in the beginning, that mortgage, I would say the interest on that mortgage is front loaded, which means in the beginning, the largest portion of your mortgage payment goes to the interest, which is the bank's profit. Only a small portion goes towards the principal. So usually the first 10, 20 years, probably for a 50-year mortgage, is all going to mostly be interest payments. And only a small portion of that, small percentage, is going to go towards the principal. So, which leads us to a con number 3. If you purchase in an area where the home values do not increase at, a large or a fast rate, you're not going to be building up equity in that home for quite some time, probably 10 or 20 years. However, on the flip side, if you buy a home in an area where the mortgage rates, if you buy a home in an area where the home values increase rapidly, then it's not that big of a deal, right? So let's take an example. Say in 2026, you buy a home for $200,000, and say within 1 year, by 2027, that $200,000 home is now worth $220,000. Now you've built $20,000 in equity by simply doing nothing. Yes, you're making you're making your mortgage payments, but majority of that money is going towards the interest, which again, you can write off that interest though. So that's a good thing, but that's another topic. So the next thing that is a con with regards to buying a home that's 50 year with a 50-year mortgage is if you purchase a home, say you're 25 years old and you make just the monthly payments that are established at the front of that loan, which is going to take you out 50 years. You're going to be well into your 70s before you pay that home off. So you really have to think about whether or not you want to stay stuck in a position where you're dealing with a 50-year mortgage. So in some cases, it might be more beneficial to wait and not buy a home too quickly because you are going to be paying a large sum of interest with a 50-year mortgage. And if you find yourself in a position where you acquire this 50-year mortgage, the home values do not increase, but rather say something happens in the economy and the home values decrease. So here we are, let's give an example of that. You buy a home for $200,000, the home values decrease, now it's worth $190,000. You're stuck in this 50-year mortgage with this high interest rate, and you think, wow, I probably want to refinance, but you can't refinance unless you bring money to the table. Now, what does that mean, bring money to the table? Well, let's do the math. So the home is worth $200,000 when you purchased it, say in 2026. Something happens in the economy or maybe just in the neighborhood where you purchased. Now the home is worth $10,000 less a year later. So now the home is worth $190,000. You're underwater because you owe $200,000, but the home is worth only $190,000. So if you wanted to refinance, because say your interest rate is not what you prefer, and say rates came down in 2027 and you want to refinance, what the bank is going to tell you is that, okay, there's a shortfall of $10,000. We are not going to fund that home for the whole $200,000. We're only going to fund it for $190,000. So that means you then would have to bring $10,000 to the table to satisfy that shortfall before you can refinance on that loan. And if you're in a position where you're kind of struggling and you're just barely making the mortgage payments, you're not going to have that $10,000 to refinance. So which brings me to our next con, and that is when you extend the life of a loan, you usually have to pay a higher interest rate. So again, if this 50-year mortgage does take off, really look at the pros and the cons and decide for yourself if this is something that you really want to obligate yourself for, because a half a century to pay off a home mortgage is quite a long time. However, if it's just a temporary situation where your income is not where it will be in the future, that once you finish school or once you finish your trade or whatever it is you're doing, once your business takes off, then that you're going to be in a better position financially, and this is just a short-term situation, then it might be worth it for you. But the bottom line, I would say for the average person, a 50-year mortgage is a bad deal. Personally, I would wait until I'm in a better financial position to be able to afford a mortgage, because things happen, life happens, and we all know that we can make plans, it can be the best laid plans, and then there's a hiccup that happens in our lives, something that comes in that turns our whole world upside down. We should have been, our business should have flourished, and we should have been in a position where we're making 20, 30, 40, 50,000 more than we were the year before or the year before that. But if something happens and that business doesn't end up living up to the value that you placed on it for the future, then now you're in a position where you may be stuck in this 50-year mortgage much longer than anticipated. And the same thing holds true with regards to graduating from college or finishing a career in the trades. If something goes off with your family life, maybe a spouse gets ill, anything, you really have to reconsider whether or not you want to be stuck in a 50-year mortgage. Now that you have the pros and cons of the 50-year mortgage, what do you think? Drop a comment, like and subscribe to Financial Fix with Sharnella. See you on the next episode.